Welcome to ForexTV.com. Today is Friday, November 7th. I'm Kathleen Reddington with your New York Forex Market Buzz. After weak economic reports, the dollar is down on the majors. And now for a look at the latest headlines from the CEP News Desk. U.S. non-farm payrolls declined for the 10th straight month. They fell more than expected by a total of 240,000 jobs in October. Non-farm payrolls were expected to fall by 200,000 jobs in the month. The previous 2 months saw huge downward revisions for a combined loss of 411,000 jobs, rather than the 232,000 originally reported. The unemployment rate soared up 4/10 to 6.5%, above the consensus call for 6.3%. This marks the highest rate since March of 1994. U.S. wholesale inventories fell 0.1% month-over-month in September. This was far worse than expectations for a 0.3% advance. The previous month's figure was revised to a 0.6% gain from a previously reported gain of 0.8%. The Canadian economy added 9,500 net new jobs in October, but there was an even larger increase in the number of people looking for work. This pushed the unemployment rate a tick higher to 6.2%, which was expected. Today we are joined by Joe Francomano of Erste Bank. Hi Joe, how are you today?
Hi Kathy, how are you?
I'm all right. We saw the dollar fall this morning after the non-farm payroll release, and the release shows that this economic crisis has really started to take hold. Are we going to see the dollar follow fundamentals here, or are the fundamentals still going to take a back seat?
Well, the key is to define what the fundamentals are, and at this point, risk aversion is the key fundamental in the market, and deleveraging as well. And deleveraging has basically given a boost to not only the dollar but the yen and the Swiss franc over the last 2 months or so. What happens is poor economic data, be it in the United States or be it abroad, only increases that fundamental of risk aversion. Hence, you see these rather large and volatile moves into the dollar, into the yen, into the Swiss franc. All today's data did was confirm that there is nothing but rocky and choppy waters ahead. I do believe that the dollar will be mixed against the major currencies. However, the currencies such as the euro and the sterling are going to continue to backslide, not only against the dollar and the yen, but also against the Swiss franc. This is going to be I think the storyline at least until the end of the year, and I don't really foresee it changing anytime soon, as basically the retail and the consumer market catches up to the financial markets.
I think you answered a bit of this question I have next for you. Many of the layoffs in the financial sector weren't fully counted in this non-farm payroll release. Could we see only things getting worse from here, at least for the dollar?
Like I said, it's not about the dollar at this point. It's about risk aversion, and yes, I do see things getting increasingly worse. The pessimism in the financial community still exists, and it's still going to exist. I think, like I said, throughout the next 2-3 months or so. This is going to inevitably spill over into the rest of the general economy. So, as far as the unsettled global financial markets and employment situation in financial markets, no, we have not hit bottom yet. As a matter of fact, we still see further cuts, obviously, in employment rates and employment roles in the financial community. However, that's just the first leg of the unemployment picture. The second is the spillover into, like I said, into the consumer section, and that's where you're also, that's where we're reading about an investment bank today saying that the employment rate will eventually hit 8.5%. You're seeing the first move of that now, obviously, in the financial community, but the remainder of that move is going to occur, like I said, in the rest of the private sector, and that bodes very well, very poorly, I think, for the first half of 2009. And how this affects the dollar, again, it's not necessarily the dollar that suffers from this. It is the other currencies. Like I said, the European currencies, also the emerging market currencies, and I think they will continue to suffer, over the next, like I said, quarter or two.
All right, well, after this bad news in the U.S. and yesterday's cuts by the BOE and the ECB, it seems that the yen is the real winner in all of this. Do you think it'll stay that way? And what's your yen strategy going forward?
the trend is your friend, and basically, we've seen extremely volatile conditions. I mean, in all of the currency markets. However, there does not seem to be any call for for a weaker yen. As a matter of fact, at this point, I think a strengthening yen, or even let's just say, I'm sure the G7 community would totally accept right now a stagnating yen, that is, dollar yen or euro yen or sterling yen, trading at or around current levels, give or take 2 or 3%. However, I don't expect that to last. I do expect the yen to continue to further strengthen. Basically, from a level standpoint, you have to go back to the mid-90s when dollar yen eventually reached 80. I don't think that is, by any stretch of the imagination, out of the question in the near future.
All right, and a little bit of good news. Canada saw some better news when it came to unemployment and employment. They unexpectedly added jobs more than they thought they would, and the Canadian dollars gained so far this morning. Is this just a fluke, and what's your CAD strategy?
Canadian dollar is the only currency, I think, lately that is not fitting the norm as far as weakening or strengthening against the dollar. We saw a lot of merger and M&A activity strengthening the Canadian dollar this week. We've seen a tremendous move from a high of 130, a recent high of 130, all the way down to this week's low around 113. However, I do suspect that that is solely based on the M&A activity. Look, the decoupling effect of the United States economy from the rest of the economy, the global economy, was a myth. The U.S. economy is the engine that serves the world, especially the Canadian economy. So at this point, I think whatever happens to the U.S. economy and whatever spillover effect that has on the other currencies is also going to hurt the Canadian dollar. Do I think that the Canadian dollar should be strengthening against the euro and against the sterling? Yes, I do. However, against the U.S. dollar, no, I don't believe that the Canadian dollar is a proxy to selling the U.S. dollar. I think it's inextricably linked to it, and basically at this point, only when the U.S. economy starts showing any signs of improvement will the Canadian economy follow.
All right, Joe, thank you so much for being on the show today.
No problem. Thank you for having me, Kathy.
This has been your New York Forex Market Buzz with Joe Francomano of Erste Bank. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.